Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at intuitive machines.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us keep these updates coming. Now, usually when we talk about space stocks, we are talking about dreams. We are talking about things that might happen in, 5 or 10 years. But today feels different.
It is very different. Today is about a company that just, decided to grow up overnight. If you've been following intuitive machines, you probably know them as the moon lander people.
Right.
But as of this week, that definition it's officially outdated.
Right. They've gone from we hope to land on the moon to we just bought a massive established satellite company.
Exactly. We're talking about a major update.
Yeah.
On January 13th, 2026, just a few days ago, Intuitive Machines completed a massive acquisition that fundamentally changes the DNA of the stock.
Okay.
It's not just about exploration anymore. It's about infrastructure.
So let's get right into that headline news. The deal is done. They've acquired LUNR Space Systems.
Which, for those who've been in the space game a while, you'll know them as the old Maxar Space Systems.
Okay, the legacy name.
Right. And this isn't some small acqui-hire where they just grab a few engineers. This is a total transformation. The deal size was $800 million.
Wow.
They paid $450 million in cash and $350 million in stock.
$800 million. For a company the size of Intuitive Machines, that is a massive swing.
That feels like betting the farm, doesn't it?
It's a calculated swing. What they've done is they've effectively bought themselves a seat at the big table. We're calling this the shift to becoming a space prime.
Okay, let's unpack that term, space prime. It sounds like a transformer, but I assume it means something specific in the defense world.
It does, yeah. Think of the big defense contractors, your Lockheed, your Northrop. They're prime contractors.
They build the whole thing. They can build the whole system. Before this deal, Intuitive Machines was essentially a delivery service. Here's a box, we'll get it to the moon.
Like Uber Eats for lunar payloads.
Basically. But now, they own the whole stack. With Artemis, they have the landers, yes, but they also have the satellite buses, the propulsion systems, the power generation, the radiation hardening.
The works.
They can design, build, and fly the entire mission in-house.
So they don't have to pay someone else to build the chassis of the car, essentially. They build the engine, the chassis, and they drive it.
Precisely. And that positions them to compete for the massive infrastructure projects. We're talking about things like the Golden Dome, that missile defense layer everyone is whispering about.
Right.
NASA's Gateway Station. You can't bid on those effectively if you're just a delivery guy. You need to be a manufacturer.
It's interesting because usually when a scrappy startup buys a legacy company, the market gets nervous. They worry about the integration. But here, it seems like they bought heritage.
That is the perfect word for it. Heritage. LUNR has decades of flight data. They've built satellites that have been in orbit for 15 years.
That's experience you can't just invent.
No. Intuitive Machines has that move fast and break things energy, but they lacked that deep institutional manufacturing history. Now they have both.
Let's talk numbers, though, because strategic shift is great, but investors want to see the ledger. How does buying a legacy satellite company change the books?
It's explosive. And I don't use that word lightly. Before this deal, Intuitive Machines had a revenue run rate of roughly $228 million.
Yeah.
And a lot of that was lumpy.
Right. Feast or famine. You get paid when you hit a milestone.
Exactly. But now, the combined pro forma revenue is over $850 million.
Wow. So they nearly quadrupled their revenue overnight.
They did.
Yeah.
And the backlog, which is basically signed contracts just waiting to be fulfilled, expanded to $920 million.
That is a serious safety net.
It is. And here's the key insight. The mood is exciting, but it's risky and it's sporadic. LUNR brings established, kind of boring, cash-generating programs.
The steady stuff.
The steady stuff. They build commercial GEO satellites for TV and communications. They build national security spacecraft. That creates a steady river of cash that balances out the lumpy revenue from the lunar side.
It stabilizes the ship. It lets them take risks on the moon because the bills are being paid by the satellites orbiting Earth.
Exactly. It lowers the floor. The downside risk is so much lower because they have a real business now, regardless of whether the next lander tips over or not.
But speaking of the ship, how are they paying for all this? They spent $450 million in cash. Are they broke now?
Surprisingly, no. They have what analysts are calling a fortress balance sheet. Even after the deal, they're sitting on about $622 million in cash and equivalents.
Wait, how? Did they just print money?
They raised capital very, very strategically in late 2025. They issued convertible notes, they did some equity offerings when the stock was strong.
Ah, so they were ready for this.
They went into this deal with a war chest. They didn't scrape the bottom of the barrel to buy Lanteris. They bought it and still have enough cash to operate for a long, long time.
That is impressive timing. Now, I did notice something weird in the reports about their margins. I saw a number one 169% gross margin. That sounds impossible.
Yeah.
You can't sell a lemonade for $1 and make $1.69 in profit. What's going on there?
Sharp eye. That's an accounting quirk. It's related to how they recognize milestone payment on government contracts versus when they actually spent the money to do the work.
Okay, so it's not real profit in the way we think.
No, it's not real operational margin in the traditional sense. It's noise.
So we should ignore that flashy number.
You have to look past it. If you strip out the accounting noise, they're still showing a net loss as they scale up. They're investing heavily.
So they are still losing money.
For now. But because Lanteris is cash positive, the path to profitability has cleared up significantly. The Street now sees a visible path to positive EBITDA in 2027.
And before this doll.
That timeline was much, much fuzzier.
Okay, so fundamentally, the company is bigger, richer in revenue, and more stable. Let's look at how the market's reacting. I'm looking at the chart right now, and, well, it's been a fun month to be a shareholder.
It certainly has.
The stock is currently trading in the $19 range. It hit highs between 1920 and 1989 recently.
Which is a massive breakout.
Huge. I mean, for a long time, this thing was stuck in the mud, $11, $14, just chopping around. But in the last month alone, it's up about 47%.
And it's not just the price. Look at the volume.
Over 27 million shares traded recently.
That tells you this isn't just retail traders on Reddit getting excited. That is institutional accumulation.
The big money.
When you see that kind of volume accompanying a price breakout, it means the big funds are stepping in. They are buying the space prime thesis.
So Wall Street is officially on board.
They're bullish. Analysts at Cantor Fitzgerald, Stifel, they've all raised their price targets and ratings. They're looking at that $850 million revenue number and saying, this stock is mispriced.
Interesting.
They see it trading at a multiple that looks like a hardware company, but growing like a tech company.
But there is always a but. I saw some drama in the insider filings. The CEO, Steve Artemis, sold a chunk of stock recently, about $40 million worth.
Yes, that did make some headlines.
That is not exactly a vote of confidence, is it? When the captain sells his cabin on the boat, do you stay on board?
Context is everything here. That sale was part of a 10b5-1 trading plan.
Translate that for us.
It's a pre-planned sale. You set it up months in advance to sell at certain dates or prices, specifically to avoid accusations of insider trading. It's mostly for diversification.
Okay.
Think about it. If 90% of your net worth is in one stock, any financial advisor is going to tell you to sell some, just to be safe. It doesn't mean he thinks the stock is going down.
Okay, fair enough. It's estate planning, not panic selling. And were there any buyers?
There were. If you look back at late 2025, during some of the dips, other directors like Michael Blitzer were buying. So it's a mixed bag, but the institutional buying volume just swamps the insider selling, in my view.
Right.
The big money is flowing in, not out.
All right, let's look forward. We've got the acquisition, we've got the new revenue, but for everyone listening who loves the actual space stuff, when are we going back to the moon?
Very, very soon. The next big catalyst is the IM-2 mission, named Athena.
And we have a date.
We have a window. The launch window opens on February 26, 2026, so just over a month from now.
Launching from Kennedy Space Center.
Correct. And the stakes for this mission could not be higher.
Why? Is it just because it's cool? Or is there real business on the line?
Oh, it's a massive de-risking event. Remember IM-1?
Yeah, that was bittersweet. They landed, but they kind of tripped over a rock, right?
Basically.
Yeah.
It landed, but it tipped over. It still set back data. It was technically a success, but it wasn't that perfect upright landing everyone wanted to see. It was a little embarrassing visually.
The tipping point, quite literally.
Exactly. IM-2 needs to stick the landing. If they land upright, deploy the rover, and drill for ice, which is the goal, it proves reliability. It proves IM-1 wasn't a fluke and that the tipping issue is solved.
It proves they can learn from their mistakes.
Precisely.
And if they stick that landing, that opens the door for the big contracts. I keep hearing about the moon buggy.
The LTV, Lunar Terrain Vehicle. NASA is expected to make a decision on that contract in Q1 of 2026, so basically right around the time of the launch.
And that is not pocket change.
No, that's a potential $1 billion, maybe more, contract to build the vehicle astronauts will drive on the moon.
And now,
that Intuitive Machines owns Lanteris, they can argue they have the manufacturing capacity to build these things at scale.
that connects the dots perfectly. Before the acquisition, NASA might have said, cool design, but can you build 10 of them? Now they can point to the Lanteris factory and say, yes, we can.
Exactly. The acquisition validates the bid. Plus, you have the defense stuff. You mentioned the Golden Dome earlier.
The missile defense layer.
The SDA Space Development Agency is putting out bids for these massive satellite layers for missile tracking. Intuitive Machines is now a prime contender for those. We should hear about those bids in the coming months as well.
So Q1 2026 is absolutely packed. We've got the launch, the LTV decision, and potentially defense contracts. But let's play devil's advocate. We're at $19. Everyone's excited. What could go wrong? What's the bear case here?
The biggest risk is always execution. Space is still incredibly hard. We just talked about IM-2. If that lander tips over again, or worse, if it crashes and burns, the stock could tumble.
Government confidence is fragile, right? If you crash twice, NASA might start looking at your competitors.
Exactly. Reliability is the currency in this industry. A failure in February would be a massive blow to the narrative. It would confirm the fears that they're just a risky startup rather than a serious prime contractor.
And what about the integration? You mentioned Lanteris was Maxar. That's a legacy aerospace culture, slower, more bureaucratic. Intuitive Machines is a startup.
Right, and merging those two cultures is like mixing oil and water sometimes. There's a real risk of a culture clash, key engineers leaving or cost overruns as they try to combine systems.
Yeah, if the Lanteris guys hate working for the Intuitive Machines guys, you lose talent.
You lose talent. And then there's profitability. You said they're still burning cash.
They are.
They are. They need to turn that $850 million in revenue into actual free cash flow. Until they stop burning cash, they're dependent on the capital markets.
And if the economy turns?
If the economy tanks and credit dries up, they could be in trouble. They have a big cushion now, but cushions don't last forever if you keep setting money on fire.
So, lots of potential, but the floor is still a bit slippery.
It's a high-wire act, but they just bought a much, much bigger net.
All right, let's wrap this up with a verdict. Looking at the acquisition, the chart, the upcoming launch, give me a score.
You know,
Yeah.
I'm giving this a bullish score of 8 out of 10.
8 out of 10. That's high for you.
It is. But the acquisition, it transforms the thesis. They aren't just a speculative moon stock anymore. They are a major defense and space player with real recurring revenue from the satellite business. That floor makes the upside of the moon missions much more attractive.
It's an asymmetric bet now.
It really is.
So here's the final thought for you listening. For years, Intuitive Machines was a moon stock. You bought it if you believed in the lunar economy. But today, they're building the infrastructure for the entire space economy, from Earth orbit to the lunar surface. The question isn't just, can they get to the moon? It's, can they become the backbone of space?
And can they stick the landing next month?
That is the $19 question we will be watching. Thanks for tuning in to Smart Wealth with Joshua.
Don't forget to like and subscribe, and we'll catch you on the next one.